Open Outstanding Tuesday, December 31st, 9:06 a.m. on this New Year's Eve. Want to wish everyone a happy, healthy New Year. I'll talk about the market, some names I'm looking at, go from there. Do apologize, my voice still under the weather. Hopefully 2025 starts out a little better. But S&P down over 1%. Again, yesterday, back-to-back sessions of over 1% losses. SPY closed under its 50-day moving average, and no big catalyst really to speak of. If the catalyst, you could say, last week yields continued to rise and gave some angst. Some of the momentum names maybe come under pressure, and then Friday it just seemed like the Magnificent Seven stocks led the charge. The Microsofts, the Apples, uh, and then similar yesterday. Same situation. We gapped lower, and markets were pretty much flat to green on the overnight hours. And then at 7 o'clock, we started to sell off, and then things just accelerated. At the open, we hit lows at 10:30. The SPY broke 585, and then a bounce up to 590 and change before a last 5-minute pull, uh, putting the close back at 588.22, and we're back under the 50-day moving average on the SPY. So not the Santa Claus rally that's been hyped over the last week or so. S&P is down 1.1% or so over that time frame, which started on Christmas Eve. And the silver lining is we still have 3 more sessions to recoup that. And historically, was it 80% of the time the Santa Claus rally period is in the green, and it's typically averages like a 1.3% gain. So we're still not out of that time frame just yet. And we'll see how things play out today. I would love to see the SPY close back above that 50-day moving average, which is 591.04. And then on the flip side, I put on the watch list yesterday. I didn't think that we'd pull all the way down to 585, but that's why you have plans in place. So I had 585 as support. If we break under that again today, I'll look for some more hedge puts just to protect on the downside. So I always look at the good and the bad. So the bad, or at least the not so good stuff, the amount of stocks trading over their 50-day moving average is back at 20%. So only 80% of the entire S&P is trading under their 50-day moving average. So if you're looking at a trend, the trend is not in the market's favor. So hopefully that starts reverse course here today. And then the flip side here is yields. And yields typically you would think would be the catalyst for the sell-off the last 2 days, and that has not been the case. So have to think some of that's just repositioning. The Magnificent Seven make up such a large majority of the gains so far in the S&P. And, it's funny, is that narrative has been out there for years now. Oh, it's only a few stocks leading the charge, but here we are at all-time highs. And that's the argument. You make that argument, but it still doesn't change the fact that the S&P, you want to hit 57 highs so far in 2024, and we'll be back-to-back 20% gains on the S&P, pending any crazy major move today. Last little chart here, and I don't know where this, it says Yahoo Finance, but this just shows the equal weighted gain of the S&P is only 13.69%. So people always like to spin the narrative. Did I put the chart in the chat room? I probably did. Oh, but if you look at just the stocks weighting, if you look at the 500 as a whole, we're only up 13%, but that we aren't only up 4%, right? We're up 25.89%. So that's because the S&P is a market cap weighted index. So when you have the largest market cap companies doing the biggest part of the gains and doing a lot of the heavy lifting, that's what you get. But you can spin the narrative any way you want. We could have a flip side, right? You could say that, what would they say if the equal weighted gains was 26%, but the market cap weighted was 0, right? You can make that same argument both ways. It's a glass half full, half glass half empty kind of situation, depending on your skew, your bias on the market. And obviously, if someone's bearish the market, they'll use that as the potential explanation for, or at least why the market should be lower into 2025. All right, so that's overall market. Take a look at some individual. Oh, actually, and last but not least, small caps. So another silver lining here, only down 0.75% versus the S&P's over 1% decline. So maybe that reverses course here today. All right, so that's overall markets. Now, individual names, and I could go on a rant here for a while on TripAdvisor. It's the more I put on the watch list this morning, the more I look and do due diligence, the more I become more bullish. And this is a name I followed for a long time, so it's not like it's a new name that I've just discovered, but it just seems like it's on the cusp, especially with the stock near 52, multi-year lows. That there's a lot of levers that could be pulled for this to double in 2025. So as much as I would like to make this one of my top 5 stocks for 2025, I typically try to find new names. So this won't be it, but I think there's some opportunities here. And I put on a watch this morning, giving a little snapshot on just one of the levers they can pull. And they already did some of it by acquiring the Liberty TripAdvisor stake, 27 million shares, which is pretty much 21% of the company. So what that does, and when it's get completed, the market cap of TripAdvisor is going to be 1.5 billion now, right? And the company does 1.4 billion in revenue, whatever it is. Um, but the issue is they did an offer. They raised debt, so I think they have 800 million in debt, 1.2 billion in cash. But then they used 500 million of that to acquire the shares of foreign change. So their financial fundamental position is a little different now, but they're still positive cash. So with that being said, I look at the fork, and the fork they acquired back in 2014 for $44 million. And then you do the math. There's no, if you go to their filings, they don't do a segment breakdown in 2015, 2016, 2017. I have to go see exactly when they start doing the breakdown. But this quarter, this last earnings, the fork did $171 million in revenue, so that and a 16% year over year growth. Back in 2015, they have a slide and it shows that the fork only did 3% of their revenues uh, back in 2015. 2015, the year end, TripAdvisor did $1.5 billion in revenue. So you take 3% of that, it's only 44 million in revenue. So now you do the math. 9 years later, that's a 16% annual compounded annual growth rate. That's not the most sexy growth, but it is showing growth. And considering its last quarter's is over that 16%, and it's did 171 million last year. I think it's guided, with 200 million, I think, next year. So you start just doing the math. I'm like, this could be spun off for a billion or higher valuation. TripAdvisor is only a $1.5 billion company. So in essence, it could double the valuation of TripAdvisor. So I'm not saying that's it, but that's just one of the levers. Obviously, a year ago, pretty much in February, there was the M&A. Apollo Group was supposed to acquire them for $28 a share, what have you. So you still have that backdrop. The fact that they don't have a dual share class anymore, and the controlling stakeholder Liberty TripAdvisor is going to be out of the picture. It just allows them to be more flexible on uh, some of those things. And then I put it on Finto and I posted in the chat room on their last earnings call. They said that they are exploring a variety of strategic alternatives was what they said. So it wasn't like one alternative or one possibility. It sounds like there's plural, right? There's multiple different levers that they could pull. So I would think that the possibility, even just the specter or the rumor that they might do a spinoff would catapult the stock back, over $20 probably. So me short term, I'm looking $15. Looks like it's holding here in the pre-market. January strikes will be in the money. Hopefully the premiums start skyrocketing. If it breaks 15 and holds, I'll just hold what I have, but I think it heads to 1750 plus in the coming weeks. And historically speaking, I talked about the last couple days, the 2023 into 2024 huge move. I don't know if it was from this level, it's 15 or so, all the way up into the 20s. I mean, it hit 28, right? And then the previous year, 2022 into 2023, similar move. That's that 15 and then 1750. 200-day moving average 1779. So good target there. I always talk about other names now. So MDB was a name that I've traded for puts as we've had weakness in the summer. I think in the spring as well. So when the market starts to sell off, I always have to have a plan, right? So 585 on the SPY was the spot I would look for hedges, similar to what I did last 2 weeks ago with the Fed, and when it broke 600. Excuse me. So I was looking at Palo Alto, ServiceNow, Lam Research, ASML, all those names. The premiums were too expensive because it was only the start of week with some Monday, and not only that, it just too rich. And then I started looking at the charts, and then MDB looked a little more attractive on a risk reward basis. The chart looks like death. You start looking, I'm like, wow, this looks like it's on a path to hit the levels they hit back in the summer in August. So I went and got some spec puts as a hedge. And of course, it breaks under 230 and then bounces, still closed nearly 2% to the downside. I'll continue to hold those puts into Thursday and Friday. And if we do find weakness, I'll look for higher strikes as a potential hedge, but always be hedging, right? That's ABH. That's MDB. Lemonade, disappointing yesterday, but considering the market pullback, only down 2.8%. When I say only, typically Lemonade sells off a little more drastic. You sort of sell off on Friday, I think it was down near 10%. So you still have that bull flag setting up. I think it's just going to need just a little kick. And once it gets that little kick, it's going to be off to the races into the 50s and 60s. Not much here to add on. JOBY was down 6% yesterday, but if you look at the chop here since the start of December, to me it's a good sign here, right? The market's kind of chopped around. It was chopping around in the 6s and 5s from August on, right? Then it hit the mid-November, right when I got the calls, and boom, it's been chopped. It broke into the 7s and 8s, and it's been chopping around in those levels for a while now, a month and a half. I think that sets a nice little floor for the next leg, and the next leg into double digits. I think it's only a matter of time before that happens. I'm trying to think of some of the other names. I had an issue with the watch list this morning, so I apologize. I wasn't able to get all the names on there. SolarEdge and Teledoc. I wouldn't be surprised to see some names to rally on Thursday and Friday, especially as we get to the year end. And some of these names, the selling has been just overselling, right? That maybe some people taking some tax losses and offsetting them, or offsetting the tax losses with some profits in some of the Magnificent Sevens. But same with Peloton, and well, Peloton's still up on the year or close to it. So those are some names. I'm not sure if I'd add them today, but maybe come Thursday morning. Just on a side note, funny stuff. Fannie Mae and Freddie Mac. Gosh, those bring back memories. These stocks back in the day. If you were trading 2008, 2007, 2008, 2009, those were like what a lot of folks were trading because those just gotten destroyed with the housing bubble and all that fun stuff. And I remember this whole the government took them over, and supposedly at some point they were going to release control, and that was going to be the next leg in the stock. And then you fast forward 10 years and even more than that. And here's Bill Ackman yesterday coming out with his bullish call on Freddie and Fannie Mac, which he's been sitting on these dead weights for over whatever years. And of course, the stock goes up, and then he puts a fair value of like $42 if they spin them, if they finally allow them to go public. Anyway, funny stuff. Rants for other days, but just brought back memories. Still like gold for downside into 2025, maybe as we hit the year end. I thought it'd be trading down to 2,500 before the year is out, but maybe into January. I think that's it. Don't forget, markets are closed tomorrow. The Nikkei Japan markets closed today, half day in Europe. So some of the markets going to close in an hour or two. And that's it, folks. Let's have a great day. And then Happy New Year. Happy, healthy New Year. And then my top 5 stock webinar will be out tomorrow. So rock and roll.